What is up, everybody? It is June 30th, 2016, around 5 p.m. Eastern Time for the market analysis video. So interesting today, another large update on considerable volume, not crazy volume, but considerable volume, and we have essentially completed this Brexit fall. We have gained all of that back and then some in some cases. So we are back in the hunt as if Brexit never happened as far as the S&P 500 goes. Now what's interesting here is that we went down and back up in a considerably short amount of time and on very high volume. It'll be interesting to see what happens tomorrow, Friday, end of the week, after completing this, what I would say completing this travel down and then back up. I would not be surprised if there's some fade and especially going into this 4th of July holiday weekend, I would not be surprised at all if we saw some sell-off, or at the very least a very small movement in the stock prices over the coming week, both tomorrow and the coming week. I wouldn't be surprised if we start off strong on Friday and then sell off throughout the end of the day. A lot of end of the month, holiday coming up, etc., etc. There's a lot of factors that go into that, but I would not be surprised. So looking at this, we basically gained back now on the S&P. We're virtually back where we were. We had a large update before Brexit, which seemed a little hokey to me. We haven't recovered to that point, but essentially we're back where we were. However, the U.S. dollar considerably higher. So in a sense, where the U.S. has received positive money flow over the course of the Brexit, because the U.S. dollar is indeed higher, and the S&P 500 no worse for wear. Also, gold is higher climb today, which was interesting, along with a decent climb in the S&P 500. We also saw a climb in GLD, which again with higher U.S. dollar prices. So definitely gold continuing to catch a bid here. It appears to be consolidating here at this higher 120, around this 126 level, and it looks like it wants to continue to be bullish and continue the trend upward that it seems to have established through the beginning of this year. I think this is really the story of 2016. As far as bullish gold, I think that monetary policy is being more and more clear that it's going to be accommodative across the board, which should be bullish for gold, and also for stocks. Frankly, it should keep stocks buoyant at the very least, in the face of what might be a faltering Chinese economy and slowing European economy with headwinds. So today, Cameron talked about. I don't know if it was Cameron. Anyway, basically the British bank spoke about easing and a rate cut this summer. So that's so England has gone from the rate hike side of the fence to the rate cut side of the fence over this Brexit idea. I would not be surprised if the U.S. The markets are pricing in the idea that the U.S. has gone from talking about rate hikes to not, and then to it being almost as likely that they will cut rates. So and the yen obviously negative rates right now, so in Japan. So we've gone to this all over on this side of continued easing in monetary policy, which It will be interesting to see the end of that and where the conclusion of that and where that ends up and where that takes us. But for now, I think commodities will probably gain, and it will be in the near term bullish for stocks as a whole as well, pending obviously economic factors. So looking at oil sold off, however, still above the 250 day. The 200 day has been sloping down, but basically retraced some of the gains that it caught yesterday, but still looks like a consolidation in an upward trend. So we'll have to monitor that and look closely. So a lot of the banks under pressure. They rallied today. They were basically flat for a large portion of the day, rallied there at the end, which I think gave the S&P and the rest of the market probably a further push. So they announced a bunch of buybacks the night before, and there's been a lot of talk. Obviously, an easy Fed or a low interest rate environment isn't particularly good for the financial sector. However, I believe they're starting to figure out how to survive in this environment, which is basically sell off a lot of their extraneous businesses, because a lot of the banks are significantly under their book value, which means as they sell off the company, they will actually get more value than what their current stock price reflects. And it also brings them under less regulation because they have less entities, and allows them to weed out the less good-looking areas of their business, or in the less money-making areas of their business. So they're really tightening the belt in what appears to be a prudent manner. So it'll be interesting to see. I'm sure they'll stick around, but it'll be interesting to see if they can catch a bid here and start to be bought up, especially in Europe. I mean, in Europe, obviously there's a lot of headwinds, especially with European banks and English banks, and the separation that may occur there, and what that's going to look like. That being said, I don't have a whole lot of I don't have any trades to show you still, and which stands to reason because of the volatility that we've been experiencing here in the S&P and the markets with Brexit and so on and so forth. A lot of times my strategy is basically take into account this high volatility move and basically wait for things to settle down before triggering trades, which makes sense because basically in this Brexit environment and this large V, it can be normal technical patterns and even seasonal patterns and so forth are probably overridden by other overriding, or by obviously Brexit factors and all these other concerns that are going on, whether it's global issues or whatever caused this spike. And so it's best to wait until this settles down before resuming your normal scans, and that's the reason why I haven't been posting a lot of these strategy trades. However, they will come back. So when it's prudent. In the meantime, I've been very long gold, and I continue to be. The gold miners are also a good play because in this, as gold goes up, the miners are going to go up, and they're also going to be helped by a rising S&P 500 and a rising stock market, and so you kind of get the best of both worlds. Obviously, it's a lot more volatile as well. But that being said, I hope you all have a great 4th of July if I don't post another video, and you can subscribe to me on YouTube at Trade Kraken, Kraken, and it's the same on StockTwits and Twitter. And God bless, good luck, great trading.